Well, the stock market reached another milestone today as the Dow Jones Industrial Average hit its newest record high since July. It hit its record close after gaining more than 190 points today. The S&P 500 and the NASDAQ Composite also hitting all-time closing highs as well. Today's gains come after continued optimism around the U.S.-China trade deal, solid economic data, and strong performances by heavyweight stocks such as Apple. Amazon also did very well today as well. Here now to talk more about the stock market and the economy is Brent Wilsey, the CEO of Wilsey Asset Management. Brent, great to see you. Thanks for coming on.
Good to be here as always. Yes.
So it just seems like the stock market keeps going up and up and up, and hear people saying, how much higher can it go? Do we need to sell and take some profits? Where do you think this market is going?
I do caution people. You should be cautious, but don't put everything into cash. Like, oh, this is not going to go on because it's gone on for now almost 11 years. We have clear skies going forward. There's nothing to stop this from going forward. We have good news on the trade with China. A strong economy. Consumer confidence last week came in at 96, above the estimate, above last month. I was reading this past week about a lot of liquidity out there and what they call M2, which is your checking accounts, your savings accounts, your money markets. So that is like fuel to the fire because you got money sitting at 1%. Gee, I think I'll put more in the stock market. So it's going very well. I tell people, be cautious, but don't think that thing's going to collapse on us. I think we'll have more to come here.
Do you think there's just less places to put your money? I mean, the stock market seems like it's a pretty good place, especially if you get some of these stocks that have dividends. Some of these companies, you can get 5% on your money, whereas if you want a 10-year Treasury note, I mean, you're, I think, below 2%.
Yeah, and it's funny you bring that up. We just bought a company in our portfolio. We're in the process of buying more of it. But it pays nearly a 5% dividend, has had profits for over 20 years, including 2008, and it's paying a 4.5% to 5% dividend. Why would I sit in a savings account when I don't need the money for the next 2, 3, 4, 5 years when I can collect a dividend from a company? I do want to point out, too, that companies many times increase their dividend each year, so that 5% dividend today, 5 years from now, could be a 6% dividend.
And the Fed chairman, I think, mentioned that interest rates are going to stay where they are, at least for the foreseeable future, so that's good news, especially for people who maybe are looking at buying a home or something like that.
Yeah, I mean, the housing market is booming. I mean, permits are up, a record, I think, over 12 years on housing permits, so that's positive. And what's great about this, too, Logan, is that back in the 90s, we had about 34 months of consumer confidence above 100. Well, right now, we're in the same situation, but we don't have a bubble. We don't have a bubble in real estate, no bubble in technology stocks or anything like that. So, I mean, we have clear sailing. So it's a good time to do wise investing. Don't go crazy and buy these crazy companies that are way overpriced, but get your good insurance companies, your banks, your food companies, good businesses that will carry you through for the next 2, 3, 4, 5 years. And I think we're going to see more records as time goes on.
For people who don't know what those good businesses are because they're not following the stock market like you, and maybe they feel like they don't make enough money to be invested in the stock market, that's for those kind of rich Wall Street people. Is there a way they can get in, maybe with like an index fund or a mutual fund or something small and easy until they kind of just get a start?
Yeah, and that's what it started with a mutual fund because they are professionally managed. And you can start, some of these funds with $100 a month. And that's what you want to do, especially if you have a 401k. Don't shy away from being in the stocks. Look at good mutual funds. And there's actually one I actually brought today that we use in our 401k companies, Invesco Common Stock Fund. It's a good fund. It's got a good balance of companies. It's a value fund. We like it quite a bit. But I will tell people, don't look at it every single month. Oh, I'm making money. Oh, I'm losing money. Look at it at most once per year.
Yeah, some people take that 5-year aspect. Where is Amazon going to be in 5 years, right? Where is Apple going to be in 5 years with these wearables, with the iPods? I think that's with the cloud, right? Things like that. Are there any other companies that you like kind of in the long term?
Well, it's funny, you brought up two companies I don't like, which is Amazon and Apple, even in 5 years.
Don't?
I don't. No, I don't follow the crowd. You follow the crowd, you go off the cliff with the crowd. So they're just too expensive. I mean, Amazon trades now like 50 times earnings. I know that's above some people's head, but it's very expensive. You want to go back to buying those good businesses that have good earnings and you're not overpaying for it. You're buying a business. You're not buying some gambling chip. Don't overpay for these businesses. And if you don't have a lot of money, you invest in that mutual fund. That's why I mentioned the Invesco fund. Is find funds that have that same philosophy where they're not buying the hype in the market. They're
Right.
buying good quality businesses that will do well in the next 3 to 5 years. I don't think Amazon in 5 years from now is going to be some great investment. I think you're going to have a lot of other investments far better than the Amazon because it's too expensive.
When Uber had its initial public offering, it was pretty high, and it has
Yes.
just gone nothing but down
Yes.
since. Do you think now's the time to pick up some Uber stock?
Well,
Or
Uber
not?
they just lost in London today.
Yes.
At the right to drive cars. I've actually followed that somewhat. I think it came out around 40, went to 45. Now it's down to like 28, I believe.
Yeah.
The CEO has said that we don't know if we'll ever be profitable. He's kind of changed his tune a little bit. But that's not the type of company you want to buy. You want to buy a company that's making profits,
Yeah.
can pay dividends. Don't get sucked into the hype because you do that, you're not going to make money. And then you say, oh, the stock market is so risky.
Yeah.
I tell people, the stock market's not risky. You make it risky by doing silly things.
Okay, Brent Wilsey. Good to see you, Brent.
All right, you too.
Thanks
Thank
a
you.
lot. Appreciate
All right.
it. All right.